All right, sorry everybody, that was my fault. Sometimes it's more difficult getting things set up on Novia than I expect. So, without having to introduce you to Kunar, here is Kunar. Take it away, Kunar. It's all yours.
Okay, thank you. Everyone, we have spent some time on technical issues, but right now we can start it. Today, I have 3 topics to touch it. I cannot say in detail because we have very limited time. So let's start it. The first thing I want to talk about is that when we do the trading, what is the most important things we need to focus on first? That is to determine our trading style. What I mean style, that means the way we trading. Because we know there are tens of millions traders in this world. Not everyone trade the same way. We need to find a way that matches our personality, our comfortable level. Otherwise, when we pull the trigger, we will have doubt. We will not have confidence doing it. So how can we find our own trading style? The first thing is, what is our risk tolerance level? Some people like more risky endeavor. Some people try to avoid risks. So when we do the trading, we need to think about, should we take more risks or fewer risks? And in a concrete model, we make that decision is what kind of market we want to trade. Equity, options, foreign exchange, fixed income, commodity, or future. So that decide what kind of a style as part of it. The next is the time frame. We want to do scalping, day trading, or swing trading. Some people only feel comfortable to do longer term trading. So that is also another factor of our trading. Once we decide our trading style, then we can choose an appropriate trading strategies to match that style. When I say strategy, is say, well, should I trade long or short? Should I trade both? And should I trade breakout, breakdown? Or should I trade the trend? Some people prefer to trade reversal. And a lot of us try to have bargains. For all those 4 types, breakout, trend, reversal, and the bargains. I should say bargains is the style we should avoid. Why? Because whether we are trying to find bargain for longs or short, the most risky things, we don't know when will be the top for the short or when will be the bottom for the long. I will show the example of the Q call. We can see this seems to be a good short top, but how many really did short over there? Most people, when they see this big dark candle, what they think is they want to buy as a bargain to choose on the long side. But we can see this is a very sharp knife. Actually, the previous chart of this stock already showed us how dangerous to try to pick up the bottom is. We can see here, we have a dark candle. People try to do a bargain hunting on the long side. This is what they have gotten. There is another one, show the same situation. So the bigger the dark candle, the more risk is. Yes, there is opportunity. We will have a rebound. But how big it is, how long it is, we don't know. So when we do long, it's better to trade on the stronger side. When we do short, we should do on the weaker side. So here we see it's a weak setup. We should not do the long and try to do the bargain hunting. So basically, that's the first topic I want to touch. We need to decide first. No one else can do that decision for you. Only you know what is your style is. Once you decide your style, your trading strategy, then you can say what setup match that style, that strategy. After you decide the setups you want to trade, then you can determine the criteria you are going to use to do the scan to find your trading target. Trading is not a random activity. You need to have a plan. Determine style, determine your strategy, determine your setup, and determine your scan criteria. That's the plan you should take first. Once you have those things set up, then you can go to the, we can call say, more practical side of trading. How you can, solicited call, sorry. It's okay? Hello? Okay, thank you. So the next thing we need to look at is how to scan for our trading. I assume that right now we pick up a trading style that is a swing trading on the long side. Then the next thing we need to do is how can we find a scan to find our target? And I add one more factor to this assumption, say we will trade something like a reversal. So how can we find reversal trading? We know that the market has reversed from the early June. So this is the market trend. But right now, it's already September. Looks like it's already near the end of the trend. But what we need to do in our studies, we look at the June level and think about how can we find a trading target at that time. What are the things we should look for at that time? So in the future, when we need a similar situation, we know how can we prepare for the coming reversal. That's related to the third topic, is how to use the technical indicators. We know there are hundreds of different technical indicators. Of course, we don't need to know all of them. But we also need to realize that there is no single magic indicators will work all the time for all the situations. So as a trader, we need to know enough indicators for different situations. And when we apply them, we need to do a educated decision. Since we know how those technical indicators should be used. So when a situation occurs, we need to know which indicator we should use. For example, this SPY reversal we know we have candlestick signals here. But candlestick signal is just one of the trading tools in our toolbox. We should have more than that. And all the technical traders know one common factor of technical indicator use is to use it to match the price activities, to check it with the price actions. And usually when a technical indicator shows some divergence, it tells us in advance what may happen. But usually they cannot tell us when it will happen. That's the function of candlestick signal, because candlestick signals tell us when the reversal happens. But divergence of technical indicator to the price activity tell us what might come in the future. So once we have expectation what might happen, then we can put focus on candlestick signal to see when it happens. Here we have some technical indicator here. This is stochastics. We can see price in May, it had a low. In early June, it has a lower low. But the technical indicator has a low, then a higher low. So this is a divergence. And if the more the technical indicators shows the divergence, the more reliable the information they reveal. So we can check to see whether we can see some other things here. Here we have another chart. We can see this is MACD. We have lower low. MACD seems doesn't show any divergence, but RSI shows some divergence there. So when something's going to happen, not all the indicators will tell us the truth. Depends on the market situation. Depends on the setup. Some will and some won't. It is our responsibility to make a judgment from all those confusing, sometimes ambiguous information to find out what is more reliable information. So let's go back to the original chart. We can, I will use the time left to say how we can do a scan at a critical time just before the reversal. Try to find possible future trading targets. Every chart has very powerful feature called sorting. And it not only has predefined sorting, predefined value for you, it has something called time period sorting. You can sort the stock price within a certain period of time. How to do it? You hit the C key, C as Charlie. And then you can define the region, the time frame you want to do the sorting. So here we use it from June to say the high in September. So here we can see, here are some value here. Let me show the template I have here for the scan. Very simple. What do we need to scan for? For all U.S. stocks. What are the criteria for the scan? I use price per share about 5 and trading volume over 1 day, 5 day, and 90 days. Basically, what I'm looking for is certain stocks have credible trading volume and price high enough so I can use margin to trade. So I can do some leverage on my trading capitals. And here we can see some of the stocks here, like SRPT, like Spring, all those things. That's how we do the first level of sorting. But here I'm not finding what can be traded right now. I'm showing you what could be traded at the beginning of June. Of course, at that time, we don't know what might happen. So what we should look for at that time to see what's going on. From SPY, the market indicating ETF, we can see there's some divergence. So stock might reverse. The market might reverse. So what we need to think about is, what are those stocks that move in locking step with SPY? And we also know there are some stocks, they may move ahead of the market or lagging behind the market. So even we miss the market reversal, doesn't mean we run out of opportunities. Here are some examples we can see. Stoch. We can see SPY shows some reversal signs here and started its reversal from early June. But Stoch still has continued dropping down. But we can see from those indicators, it shows continuous positive divergence. And this stock reached its bottom in mid-July. So even we missed the market reversal for 6 weeks, we still have opportunity, can find better trading targets after that. So never worry about you missed the trend. There are always a new trend. Well, leave the station later. So we have seen the pattern of a potential stock reversal displayed on a chart. So right now we can go back to look at the current stocks. What kind of stocks? What stocks shows similar patterns? Stock trading is a semi-science. It's not like mathematics, an exact science. You have a formula, you have parameters, you fill in those parameters with a fixed set of values, you get a fixed outcome. But trading is not like that. But trading still shows some common similarities in patterns. So when we find similar patterns, even we don't know whether it will behave the same way, we should have some higher confidence in mind. So after we have that kind of judgment, we use stop loss to protect us if something happens unexpected. So we can see there are some stocks right now shows similar behavior. Radio check. Looks like very obvious, right? Right now, it has a little bit lower low, or say the same low. But we can see this technical indicator shows positive divergence. And the other two technical indicators shows positive divergence here. That's why I displayed this chart this morning, say it is a potential long target. And it demonstrates itself. Yes, it does. It has quite good run today. So if you have these kind of things in your mind before you trade, at the time you do your scan search, then you have a step ahead of other traders. Another thing we should look at is the moving average convergence. Like here, we can see usually moving average is a mathematical way to smooth out daily fluctuation of stock price. We can have several different length period of moving average, a long term, an intermediate term, and a short term. But when we see this kind of convergence, that means the short-term price move has faster momentum than the longer term. That means the stock price towards some direction. So if we use the moving average, the chart pattern, this is a double bottom, this is a little fry pan, J-hook. We have MACD, we have RSI divergence. Then here we have the Warden time segment volume divergence here. So we can have certain confidence this stock reached the critical point, ready to reverse when we don't know. But here we have morning star, here we have fry pan, here we have a long-term moving average break out. So all those things together, we can see we have trading volume confirmation. Adding together, when we try to decide whether we should pull the trading trigger, here we have higher confidence than other setup does not have this kind of conditions. Hope what I have talked about today give you some idea how you should planning your trading, how you're going to search for your trading targets. Thank you. Hi, Steve.
Yes, Gunnar.
Yeah, I just completed my presentation.
Okay, do you want to take any questions?
Let me see.
Somebody says, why do you choose the 34 and the 22?
24, and actually I use 34. The 22 is not for the price moving average. I use 2, 8, and 34. That's for my price. This moving average 22 is the Warden money stream. That's something I didn't mention today. Because I think that for a swing trading, 34, since it's very long term. Wow, too many questions, faster than I can catch.
Okay, let's see. I think we have this recorded, so anybody that needs a recording will need to get with Abraham. Let me see if there's any questions here that we. Let's see.
Let me pick up some questions people here they ask. Some people ask me, how do I do my daily scan during the trading hours? That's a different topic because what I show here is end of day scan. End of day scan has a very big difference from intraday or day trading scan. Because end of day scan, you are looking at data. It's already fixed. The trading hours already end. And the data will not change. So when you do your scan, you will get a definite result. But for daily or intraday scan, everything is fluid, it's dynamic, it's changing. So when you do the scan, you need to adjust according to your style and the market condition. That is a totally different topics. If people are interested, I can talk about more or not talk about, post more tomorrow in the chat room on intraday scan.
Kunar, that's great.
So Steve, do you have anything to say?
No, I listen, and no, this is why the whole chat room was set up in the first place, so that we are not reinventing the wheel. But if somebody has good ideas like yourself, and that you've got people listening to what you're doing, that they don't have to try to reinvent everything. That your generosity as far as showing people what to do is going to help other people trade better.
Actually, I want to say that trading is something some people will never get it. But fortunately, those kind of people are in a small percentage in all the people. More than 80% of us can learn how to trade. The issue is
exactly. Yep.
How long will it take us? Where to pick up the information and the education? If you find the right education, if you devote enough your own efforts, you will make it. I spent 8 years on my study.
You spent 8 years on your what?
Trading study.
On your trading studies, all right.
Yeah. And
all
I
right,
only got those. Sorry.
Go ahead.
I only got all those my knowledge put together in the past 1 year. Actually, those information I have learned them over the years, but I just don't know how to put them together. I just had that big aha moment a year ago. Then I start apply what I just talked about. In the past 1 year, I found the result is amazing. So I want to share with other people. So other people don't need to waste time and money to search in the dark. If guys or girls are interested, I will stay after tonight's session and probably answer some questions.
Okay, any more questions for Kunar?
Yes.
All right, Kunar, thank you very much. As you know, everybody well respects your trading abilities and your opinion. So this is a big plus. And again, everybody, whether you take all of Kunar's information or just one little piece, if you take one little piece of somebody's trading and it makes you a better trader, that's what everybody's here for.
Yeah, thanks, Steve. Give me the opportunity. This is the first time in my life I present how to trade to other people.
All right, good. When was that aha moment that you did in trading?
It's from one of Tina Logan's free webinar. When she said a daily candlestick is a chart pattern for intraday chart. Because when we look at a daily candlestick, whether it's a bullish, bearish, or just a spinning top or doji,
right?
If we look at an intraday chart, even the same candle, they may have different intraday chart.
Very good. Very good. All right. Well, Cunard, thank you very much.
You're
I
welcome.
hope you will assent to coming back and doing some more.
I hope so.
Okay, great.
Thanks.
Thank you. All right. That was good information. We're still kind of early. Do we want to just kind of take a look at the market trends real quick? All right. Well, again, we appreciate Kunar presenting like he has. I know it takes a lot of time and energy to get prepared for one of these. And again, that's the nice thing. What I'm really pleased about the chat room is that we have people like Kunar and David L. and a bunch of other people that are very generous with their knowledge. And that was one of the things that people always came back to me and said, well, aren't you afraid of if you give this knowledge out to everybody that it's not going to work anymore? And that's kind of a ridiculous viewpoint because, number one, we could teach another 50,000 people how to use candlesticks, and it still wouldn't even make a wrinkle in the amount of people that are out investing in the markets. It wouldn't even make a scratch. It wouldn't even make a dent. I used to be I watched people that were very guarded of their trading method because they thought it was something spectacular. But I discovered that most people's trading methods eventually blew up on them. And so the reason I started sharing candlesticks was I always went on the philosophy that the more people that know what you're trying to do and they can add to it, the better your trading is going to be. So, anyways, that's why I'm very pleased with the the atmosphere of the chat room where everybody is pretty much generous with their time and knowledge, and I guess it's kind of gratifying to have somebody come back to you and say, what you said the other night made me see the light, and so I guess it's almost like being the parent that pushed that kid on the bicycle without any training wheels, and they started riding on their own. Not that I ever had any kids. So anyways, let's say, what are we going to do? Let's see, a question is, how often do you use the scan results from the night before? Every single night.
What I found is that the end of day scan.
I'm sorry, say that again, Kunar.
End of day scan. Each day I did it, and I can find a lot of good charts. And I found the next day, if it's a normal day, probably I have 1/3 of them works. If it's a bullish day, probably I will have 50 to 70% of them work. If it's a bearish day, sometimes even less than 10% of them work. So candlestick chart is just a necessary condition for trading. If you want to have a successful trade, you must have those set up. But if you do not have your own judgment, just follow the chart. Sometimes you will get surprise result.
Exactly. Yep. All right, I'm trying to get my projector. I'm having the same trouble that Kunar was having, trying to get the darn projector to come up.
Wow.
So what's happening here? All right. It looks like I'm going to have to log off and log right back on. So give me 3 minutes. I'll be right back. Okay. As we see, the Dow has just been absolutely flat. We're in an overbought condition. And we get a doji right on the T-line today. So this makes tomorrow's trading relatively easy as far as projecting which way the market's going to go. It's obviously going to move in the direction of how they open it. If they open it lower, the probabilities are going to be that they're going to take it down. You can see that it's starting to maybe do a little rollover. If it opens positive, we've got this scenario where they're doing a stepstone type move in the market. The S&P 500 kind of, see, that's different. Apparently opened lower and came back up by the end of the day. Whoops, I've lost. Okay, not seeing anything on the screen. All right. Bye. Let's see. The question is, do you pay any attention to weak months of the year? No. There's the only thing I pay attention to is what the market is doing right now. There's general consensus of what it should be doing. September is known as a bad month. October is usually known as a bad month. But they're only known as bad months depending on which way you're trading the market. So if you're short in a bad month, that makes it a good month. So you don't get caught in the generalizations. General generalizations, that's a reoccurrence. Just let the market, when you get to where you can analyze what the market is telling you, then you don't care what the assumptions are for a certain time frame in the market. All right, Kunar, you can just keep answering the ones you're coming in blue so they can see your answers. All right, I don't have anything prepared other than the fact that this market really isn't telling us whether it wants to go up or go down. Now, I would think the inclination is that it wants to go up, mainly because the T-line keeps acting as an effect on this market of where they open and close it, or where they touch it and bring it back up. I would still, even though we're in the overbought area, be inclined to think we're going to pop to the upside. Is there a way to ask you more questions later? Yeah, I guess if you have a question for Kunar, just put Kunar in front of it and then ask the question. I think there is a, is it, Oh, what is the ETF for oil? Somebody. Oh, USO? Okay. Why, I can't remember that. So there's your USO charts, and there is your oil chart. I'm talking about tonight, Eduardo. Yes, so one of the things I do during the day is I will put CNBC up on the TV screen, but I'll turn off the sound. Um, yep. So yeah, tonight we're just going to kind of do a question and answer session without doing individual stocks. Perfect reason for not doing individual stocks because this market is just, when you get 2 weeks of sideways motion, there's nothing out there that's moving great. Now, there are a few that still make life interesting. BCS is still acting growing. RSTX came up nicely. I still think this one can be bought. I'm expecting a wave 1, 2, 3 movement. Now, the reason a 1, 2, 3 movement is so predictable is you've got a steady uptrend, then you have profit taking, then investor sentiment changes and it starts the uptrend again. So I would suspect that if we came from 24 to 36, $12 from here is going to take us up to the $42 range. Do you scan for stocks during the day? Very rarely, John. What I do, I can probably do this. What I do is I usually have a, let's see if this is coming through all right. Is this? Yes, it is. I do my scans, and I'll have a list, my watch list 6, where I plop everything into that list. And then once I've gone through all my different scans, and right now my simplest scan is that I'm just looking for stocks that have the biggest percent price move. That's the most basic of all the scans. The reason for that is, now the better scan would be scanning for stocks that are in the oversold area. That's where we want to find our best deals. However, let's see where that is. May not have added it up. It's basically this scan right here, but with stochastics in the oversold area. And I might not have put it up yet since I got back from Pittsburgh. The reason for that is just logic tells us that if we're in a market, if I can get back to the market, the best way to do it. If our market is like this for the last 3 months, if something's in the oversold condition, it's probably down there for some reason. I probably don't want to be buying it. I want to be buying things that have built some of this upward trend into it, like the fry pan bottoms or J-hook patterns. So the scans are based upon what the market conditions are. So I'm not looking for oversold situations right now because if it's oversold, there's been something wrong in this market. What I am looking for are the ones that have come up and then they'd be doing J-hook patterns because they're in the process of moving in the right direction. The software that you were just looking at, this is TCNet. All my scans are going to be set up here within the next few weeks on Stoch. What am I looking at? This is the easiest one I've found besides Stoch for quite a while. I've been using this ever since probably back in the 90s. And the reason for that is there was a while where TCNet and TradeStation were heavily promoting in Houston. The problem is Houston was still on dial-up, and TradeStation could bring everything to a standstill. Yeah, this is Warden TC2000. I call it either TCNet or 2007, but it's all Warden Brothers. They've got a newer version, 2012. I think I'm still on the 2007 because I've got everything all set up already. So if I'm doing my searches, I'll come to my, it might not even be. I'm over here in the scan part where the searches are, in my trading universe. In my trading universe is stocks greater than 5 and trade more than 200,000 shares a day. Once I go through all my scans, one of the ones that I will use every day is the kicker signal. The new version is 2012 V12. Yes, this is the 2007. But I'll do the kicker signals. Once I've got all my scans, I put them on a watch list. And I forgot that we're only on part of the. Let's see if I can do this. Try to make this. Oh, see, you all can see the whole screen. Oh, that's right. I was doing it. So I put everything on watch list 6. Then I go down and say, which ones look good? Now, you're probably going to see ROSG on our reoccurring reiteration of a buy today. Then there's a few other good ones. Here's KS, left-right combo, followed by a gap up, kind of a scoop pattern. The worst case scenario is this has now gotten up to the point where it's going to be a 45 degree, which will be the same trajectory as this right here. And international paper, another one. If this opens positive tomorrow, what type of signal or pattern do we have setting up? Anybody? There you go, flutter kicker signal. And if we have a flutter kicker signal coming out of here, that probably tells us we've got a lot more powerful upside left to go. Zales, another one is maintaining a steady uptrend. And STI was somebody brought up right before the chat room closed today. We got kind of a bullish engulfing signal setting up for a J-hook pattern. Why is this probably a J-hook pattern? Because we've got the classic fry pan bottom, breakout, strong price move, and what do we need for a J-hook pattern? We need a strong price move, then a pullback, and then start the next leg up. Why were we short IP last week? Because it gapped down, but then when we had the left-right combo, that was time to close it out. Even though this showed us a good, strong force to the downside, this told us the force wasn't there anymore to cover the position. Okay, so with that in mind, what did I have that was interesting? Oh, this is probably the other recommendation. GDOT. Make this big enough where we can all see it. Notice that we got to look at this real closely. First of all, you've got this T-line squeezing up into the 50. Notice where it opened today. It opened at the above the previous day's open. So if this opens positive tomorrow, what do we have? Well, we have an opening positive, so it's going to move in the direction of how they opened it after a doji, number one. Number two, thinking it's trading up above the 50. Number three, you got the T-line squeeze going on, and you've got a breakout into an area that it has no resistance, which is this big gap area. You got plenty of running room. Let's see. Glenn, I'm not moving to Metastock. I'm just, the Metastock's got me contracted to do candlesticks for them. So, no, I won't be changing from Mona. I'll probably be using Metastock more often over here. But they want me to show people how to use candlesticks using Metastock. All right, some of the other things. Oh, we were looking at crude oil. Crude oil, I think, could be getting blasted here, obviously. That's going to take us back down into the 80s. I had somebody ask the other day, why would you think it's going to the 80s with all the turmoil going on in the Middle East? Because prices move based upon investor perceptions. And there are people out there trading crude oil that are a heck of a lot smarter than us when it comes to the crude oil markets. For all we know, for all somebody knows is there's a flood of crude oil sitting someplace else that if they start pulling the plug, there's no more supply than there is demand. It's going to drop no matter what people think is the problems in the Middle East. Gold did a little gap down. So the question today was, what was the gap up? Well, the gap up wasn't really that stringent, but the fact that they did do a doji and gap it back down through the T-line, that's more telling to me than anything else versus a little gap up doji. So, especially with us being up here in the overbought area. Silver, same scenario. Spinning top, gap down through the T-line. Just the fact that they're back below the T-line tells us there's a definite change of investor sentiment. The U.S. dollar. Gunnar, I think your microphone is still on. U.S. dollar looks like it's trying to bottom. Now, I say it looks like it's trying to bottom. The trajectory coming up is relatively slow. The slower it is, and the longer it takes coming up, the more opportunity for the bears to get confident and the bulls to get dissatisfied, and they slam it down again. Trying to think of what else would be in the commodities area. Cocoa, ever since it failed up here, notice where it came from. The T-line, right smack dab down to the 50-day moving average. Sugar, not going anywhere. Now, I'm long lean hogs, because ever since the Morningstar signal and they took it up above the T-line, it's been in a nice steady uptrend since then. Now, is it going to stay up there? Probably not. More than likely, now that it's come through the 50, it's going to come up, get a sell signal, it'll come back down, test the 50, probably at the same time the T-line will have caught up, come back, see if the 50 is going to act as support. If it does, then your next target is up here at the 200-day moving average. Soybeans, pulled back pretty solid here for the last few days, but today they did kind of a hammer signal, and they're trying to build some support. Notice where your stochastics are. I guess this would be more intriguing if we would make it humbug. Cattle. Let's go through the. Let's see. This is wheat. Wheat. You can't trade this. This is so flat. And corn. Still in a downtrend until you see a buy signal. Live cattle. Whoops. GLEZ2. Live cattle is still short as long as it can't get up above the T-line. Now notice when it's moving sideways, where did they come up and test? They came right smack dab to the T-line and failed. Came right smack dab to the T-line and failed. That keeps telling me we're in a downtrend until they can get back up above that level. Brandon, no, I think, well, you're getting toward the oversold area. And as we can see, the 50 has acted as support in here for the last few times. I would guess that if they don't get this through here in the next 2 days, I mean through the 50, they're going to start taking it back up to the top of the trend channel again. Let's see, we did lean hogs, we did GS. This is CBST. Evening star signal closed below the T line. This one you can short on any weakness tomorrow. And SPPI. Same scenario. Notice when it failed. Right smack dab at the 50. Bearish engulfing signal. Doji gap down. We're right about this level. If they break this level, you're going down into, who knows. Gold we did. Gold, I think if this opens lower tomorrow, you want to be shorting immediately. Mm-hmm. Oh, let's see. A question up here a little bit further from Howard. Howard, we do the training sessions for members on Monday nights. Usually that's one that I do, but Kunar came on tonight to give us a presentation because Kunar you will see in the trading room every day. Again, very unselfish as far as giving out picks and advice. And it's a place where if you have questions, don't be afraid to ask questions. If you have ask a question and it's not answered out here, at least I'll be able to watch and I'll try to come in and answer questions. When I can. There is, I think, over 1,300 pages on our website now of information, free information. Yeah, and then another place where it's all kind of put in order is the books. My first suggestion would be high profit candlestick patterns. And David, yes, I'm usually reluctant to sell or short the biotechs. But I don't think Spectrum Pharmaceuticals is the small biotech. I think that's more a pharmaceutical supply company. So it doesn't have the same upside potential. Copper had a little bullish harami today, but we're not anywhere near the overbought area. If this opens lower tomorrow, you can still be shorting it. Actually, we will look at Apple. Apple, I guess, they said could be the first, $1 trillion company. But right now, with it trading below the T line, got to be very careful. Now, it's been using the 20 and the 50 as support, but there's a good possibility they can bring it back. They always can find an excuse for profit taking. All right, thank you, Tony. Does anybody have a sample trading plan that I can use to trade to create my own? Bernard, I think that's something where you have to kind of develop whether you want to be day trading, swing trading. I mean, that's not somebody else's plan. That's you kind of sitting down and saying, all right, what do I want to do most? If it's something where you can only get to the computer screen maybe an hour or two a day, you may want to be doing swing trading. If it's something where you're now able to sit in front of the screen all day long, you might do day trading. So that's something that you come up for yourself. We're not going to try to check out too many individual stocks, but the ones that we're long we'll look at. This is still a fry pan bottom that's staying above the T line with a double doji setup over here, which means if they open this higher tomorrow, you definitely want to be a buyer. Holly, if you'll send that to Bernard, appreciate it. EXL, you call it a left. Can EXL be called a left-right combo? All right. XEL. It could be, but yeah, it's close enough that I would consider it. Not only because it's, no, I'd call this just more of a bullish engulfing signal. However, look where the bullish engulfing signal is occurring, right on the 200-day moving average. Stochastic's coming up, so it doesn't necessarily need to be called a left-right combo. Just the fact that it's a bullish engulfing. If it trades up above the T line tomorrow, you definitely want to be a buyer. Cheryl, yes. Any of the formulas that you can look at, I mean, they're all so simple that if you can verbally explain a formula, such as if day 2 opens lower than day 1's close and day 2 closes above day 1's open, if you can verbally say it, you can easily write it. And then when you write it, you just do it based on all the symbols or the letters that they want to use on that software. And again, this is another aspect of candlestick analysis that's very easy, is that it's all common sense, just put into a graphic depiction. So there's nothing out there where a formula is so difficult you can't write it for anything. Do you have any guidance for profit taking intraday? Roy, the only thing that I do is if I see something, I'll just pick out this one, that if I'm in an uptrend we shouldn't trade back below the open of the previous day. That tells me the bears are in there too strong. That's where I'll put a stop. Now, that stop is usually more prevalent when I'm in the overbought condition. But if I'm in an overbought condition, I don't want to see any trading back below the previous day's low. And if it's in the oversold condition, and this is my buy signal, and this one opened here, it shouldn't come back down below this level. That tells me the bulls aren't in control yet. And we will do another session on stop losses. I don't know what the calendar is, but I think Pat has a setup for one of the first weekends in October, which sounds so far away, but that's just a couple weeks away. We were going to do a 2-hour training session on scanning, and that's going to be free for members, and I think it's $297 for non-members. So look on the events schedule. We have something coming up this week, don't we? I'm going to get my little calendar out here. Tuesday, October 2nd, we're going to be doing day trading patterns, prevalent candlestick day trading patterns. Then oh. Is it this Thursday night? Are we doing our session on gaps? Yep. September 27th is my birthday, so it won't be a long session. And I'd like us to do a test. I want everybody to go to their checkbooks and write me a check for $5,000, and half of you address it to Spring, Texas, and the other half address it to the Woodlands, Texas, and we'll see what checks get here the fastest. Your system works so incredibly well. Why then do you have so many guest speakers doing webinars on other systems? Shouldn't we just focus on learning and mastering yours? Tony, I've discovered through the years that my system with the techniques or the indicators that I've set up work extremely well for me, but they might not work well for you. You might not trade the same way. So if some of these other speakers come in and show one or two other little techniques, I mean, just one little teeny indicator that might be something you use a lot better than I would use, then it's going to improve your trading. Now, I bring in other speakers for two reasons, because I believe that everybody should be constantly looking at things that will make them trade better, tweaking their own trading, obviously using what I consider the most solid and basic of all trading techniques, which is candlesticks. Then the other part of it is marketing. That there might be a few people out there that have techniques that they think are wonderful, that we can see right through, that aren't all that great. Just makes candlesticks look that much better. Which address bounces a check the highest? Okay. Yeah, so the reason, again, that we have a lot of speakers coming in is just so that you can put the right combinations to trading, again, what I call the best trading technique, which is candlesticks. You just want to tweak it so it works well for you. Love to hear in more detail it seems that they trade a lot, so I'd love to understand candlestick trading for intraday you look for. Okay, we will do that. That was the old Soupy Sales got fired because of that technique. He on an afternoon program, he told everybody, all the kids, to go to their mother's purse or wallet and pull out a $1 bill and send it to him at such and such address. I think he had $11,000 come in, but he got fired for it. When you are a guest speaker on somebody else's website, is there a way we can also attend to hear the speak? Sure, Rad. But it's probably going to be reiteration of what you've already heard. But I'll be glad to let people know when I'm speaking someplace else. I've got just a kind of a basic presentation of why candlesticks work and the 12 major signals. But I have discovered I still have people come to training sessions that I do, and they've been to dozens of them, and I keep asking them, why the heck are you coming to listen to this? Don't you get bored? And they said, no. Every time we listen to one of your sessions, we pick up one little thing that we heard before, but we just didn't understand, and it made sense this time. So we're always learning. So, okay, I'll have Tina come back. She's busy. That's right. She got Unar to do the AHA. Super Sales, was he in the history books? That's right. Let's see. What do we? I'm trying to think. We got the dollar. We got. Let's see. It would be ROSG that I think you can be buying on positive trading tomorrow. Horizontal line. That to me is a fry pan bottom with a kind of a T-line squeeze with a breakout through the 50. If it opens higher, we'll be breaking out through this area. This going from here to 10, basically, it's going to give you a 50% return. Let's see. Could you give some advice on how to manage a position if you were not for the? Okay, that's right. If okay, let's say I was buying ROSG on a positive open tomorrow, and I can't sit there and watch it. So I leave for work or leave for the golf course or leave for something. It executes. I own it. I immediately am going to put a stop someplace that I don't think it could ever possibly get to because, it'd just be too far away that if it got to this point, that would be at the previous day's open. But if it came back down through there, something was wrong with this trade. And there are going to be some like that. Just because we're playing the probabilities. Prices move in predictable patterns, but they're predictable because they work that way most of the time. Some of them 70, 80, 90%, but that means there's always going to be a 10, 20, 30% that it's not going to work. Some of them don't work immediately. What did we do the other day that was very painful? I think it was ISIS. Yes, this one worked out very nicely. That if this opened positive, we probably had a nice little rounding bottom breakout. But it opened positive and came right back down. This is where it should have executed right here, because if this was an upward trend, it shouldn't come all the way back down to the previous day's open. So one of the things that you have to learn, which took me years to learn, is that 2 out of 3 of your trades are going to work. That means 1 out of 3 of your trades is not going to work. So the point of investing is what they always tell us to do: cut your losses short and let your profits run. Unfortunately, they never tell us how to cut our losses short. We have to pick a spot, depending on your availability to trade, that would tell you if it came back through this certain level, this trade is not working. Get out of it. And in this case, it might have been all the way down through here, or closing, if it didn't get down through here, closing more than halfway down this candle. Deck, yes, I think Deck was well, Deck never got executed. However, Deck did a bearish harami and then gapped down the next day through the T line, so this became a short. That could be, because I very rarely look at the weekly chart. But, let's see. Yeah, could have interpreted, but you could interpret a lot of them as, or a lot of it as being, I guess, pulling back, yes. All right. Let's see. Yes. Reading Tony's question. Steve, if it came down below the prior day's low, but was still above the T line, would you still close it out? Yes. Got to remember, the T line is just a confirming indicator. The signal is your top priority. So if you get a situation where they've closed it, let's say this was up here and they closed it below and you were still above the T line, doesn't make any difference. It showed you there was weakness the following day that you didn't want to be in that trade anymore. We close out all long positions on tomorrow's lower open and go short. You look at each one of those positions and see how they're reacting. Now, some of them may only be pulling back in an uptrend. Others may be confirming a sell signal. It would be the ones that were confirming a sell signal that I would close out. What's the signal tell you? Doji followed by a gap down. Remember what our best friend is? I would be shorting this one. Now, look at this chart. And this is where, what is this? This is what I call observe the obvious. You're in a downtrend. Now your 50-day moving average starts. You're in a downtrend. You're in an overbought condition. You get up to the 50 and it fails. What's that tell you about your trend? You're still in a downtrend. I would guess I would guess that if you could draw this trend channel, that this is probably where your target is somewhere down here. This is fun. Okay. All right. Any more questions? And I see that Kunar has still been answering questions to everybody. If that's it, let's call it a night. Again, Kunar, thank you very much for your presentation. And we'll see everybody in the chat rooms tomorrow. Have a good evening.